Excel accounting practice problem. Enter payroll for second month, part number 1. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's 2 tabs on down below. We got the example tab and the practice tab. The practice tab starting out where we left off last time. The example tab, in essence, being an answer key. Let's go over to the example tab now. We're going to be processing payroll. This will be for the second month of payroll. If you're doing this, if you were to do this in like a QuickBooks system or an accounting system, or possibly if you had a third-party payer doing this for you, something like an ADP or a Paychex, we would be processing payroll periodically depending on the payroll that we have set up. Generally, that being weekly, bi-weekly, semi-monthly, or monthly. We'll be doing it monthly in our case because we don't want to run multiple payrolls within the same period in the practice problem. We're going to go all the way to the right first to calculate, in essence, our register, remembering that if you are to do this within your QuickBooks system or in like an accounting system like QuickBooks, then if you were to do it within that system, you would generally be paying more for the support of the payroll, although the desktop version does have a manual payroll, but that's not something that you'd want to use oftentimes in practice, although it's a great tool for practice, not actually using it to calculate payroll live, but to run practice problems, because the payroll process within like a software will help you with the double checking when you enter the transactions into the system, help you to calculate the taxes. You also could then possibly have a third party like an ADP or a Paychex process the payroll, them then being responsible for some of the complexity of the payroll reporting, some of the human resources sides of things, such as reporting the year-to-date information and the paycheck information on a period-by-period basis to the employee on the pay stub, gross pay, and the withholdings. That starts to get quite complex. So in other words, payroll in and of itself, any one component is not that difficult to think about and think through, but when you put a lot of simple things together, at some point you end up with complexity, right? And that's kind of what happens with payroll, because even if you only have a few employees, you still have to think about the payroll on an employee-by-employee basis, as well as on a complete or total basis for all of the payroll, and think about it in terms of a paycheck-by-paycheck basis, as well as a year-to-date basis for both the employee and by employee and the total. And then you've got the federal income taxes, which includes FIT, Social Security, Medicare, federal unemployment tax. You've got the state taxes, which will differ from state to state. So that means more complexity oftentimes because now you don't have the uniformity across the full United States. And then you could have other benefits like a 401k plans and the health insurance and so forth, adding more complexity to the tax return as well. So if you were to calculate it within the QuickBooks system or like an accounting system like QuickBooks, you would have all that complexity that you would need to be generating within the system so that you can provide that detailed information to the employees by the paycheck stubs and be able to populate your 941s and which are your quarterly forms, and your 940, the year-end form for the federal unemployment tax, and the W-2s to be generated from the system, and the W-3 and so on at the end of the year. If you were to have someone else do it, like a Paychex or an ADP, then you can have them possibly do some of that more complex type of reporting stuff and doing the tax return, help you out with the tax return, help you out with the entering of the paycheck stubs and so on, and processing the payments. And then you might get something like the payroll ledger here that you would then still need to populate in some way, shape, or form into your accounting system so that the accounting is correct with regards to the presentation of the assets, liabilities, income, and expenses. You still want your financial statements, in other words, to be reported correctly, but you don't need so much detail in your actual accounting system if you're not processing the payroll within your accounting system. You do need that added detail for human resources purposes and so on in some way, shape, or form, either in a third party or in the accounting software that you are going to be using. So whether you're doing it internally or you're doing it externally with a third party, generally a payroll register or reports like that will be generated. and those will be used in order to give the supporting information to record the financial statement transactions, process the paychecks, give the pay stubs, and then print or process the quarterly 941 forms and the year-end 940 form and the W-2s and W-3s and so on. So we did this for month 1, similar process for month 2. Let's go to the practice tab and just go all the way to the right in the practice tab, and we'll copy over starting at the same information, and then we'll just alter it for the second month. Now note that oftentimes you might say, isn't it going to be exactly the same since I have the same 2 employees? Sometimes it could, but some complications could complicate that. So for example, the FIT is a little bit complicated because it's a progressive tax. So you got to be careful with that and make sure you're pulling that information from the table. But if it's the same from month to month and there has been no changes on the W-4, that might remain the same. The Social Security and Medicare are typically easier taxes to calculate because they're more flat taxes, but they do have a cap on them. So you got to be careful that you could possibly hit that cap, and then that would mess up your calculations for the Social Security and the Medicare. When you get down to the employer taxes, you have a Federal Unemployment Tax Act tax, and that one has a very low cap, which basically everybody hits. So that means that the first quarter payroll is typically going to be different, way different than the second, at least with regards to that tax. And that, again, is a little confusing oftentimes. So what we'll do is we'll just start off by copying. I'm going to copy all this stuff here, and then we'll just calculate it again. I'm going to copy this down here. I'm going to put it down below. And so this is going to be our new information. And then I'm going to delete all the stuff. I'll just keep the gross pay. We're going to keep the gross pay the same. And then we'll just recalculate this to see how it would be done here. So we're going to say, okay, Adam is making the salaried pay of the 4583. Then the FIT, that's going to be the federal income tax. That's what the employee's federal income tax is, not ours. We have to pay federal income tax too as the business on our income in some way, depending on what type of entity we have, sole proprietorship. Then it would flow through to our 1040. If it was a corporation, then we would pay at the corporate level, unless it was an S corporate. But in any case, the FIT, we would get this from the W-4 type of information. And this is the one where it's quite useful to have software to help you out, because you got to look up tables and whatnot to get the proper FIT tax on it. It's not a flat tax, can be confusing. Software is useful to double check on it. We're going to just put 720 for our purposes. We're going to then calculate the Social Security employee portion would be based on the gross pay times 0.062. That's usually more of a flat tax, so they might increase the rate over time and whatnot so they can actually pay off the Social Security thing. But in any case, it's usually more of a flat tax, but it does have a cap on it at some point. So once the employee hits the cap, you got to be careful of when that will happen, and that means that you got to track how much has been paid up until this point to see when that cap will be hit. The Medicare is usually more of a flat tax, meaning it's just a rate times the gross pay. So the gross pay times 0.0145 at this point. So we calculated it properly this time. Last time we messed up the calculation and used the messed up number so we could match our practice problem, but it's just practice. So here it's, we're just estimating the taxes, but it's usually more of a flat tax. This equals the gross pay minus the FIT, federal income tax, minus the Social Security, minus the Medicare. Now again, you could have other things that would be deducted depending on the circumstances, like state taxes, depending on the state that you're in, local taxes, and then possibly other things that would be benefits, 401k plans, and health insurance and that kind of stuff. For Erica Smith, we're going to say that she earned $2,400. Again, we're just going to estimate the FIT. We're just going to make up a number for it. It would be based on the tables and what she gave us with regards to her W-4. Then we're going to say the Social Security is going to be the gross pay times 0.062. That's more of a flat tax generally. Then we're going to say that the Medicare is going to be equal to the 2,400 times 0.0145. That's going to be the 35. And so then we'll say this is going to be equal to the 24 minus the sum of these two. So that's going to be a little bit fancier of a formula. And we're going to make one change up top. Now notice this is another kind of basically an error that I had in the practice problem when I entered this into the QuickBooks data. So but it's just a practice problem. So we're going to change this Social Security to be 248 because I did like a dyslexic number switch there when I entered it into our other practice problem in QuickBooks. But it's just a practice problem. It's usually going to be a flat tax on it. So just be aware of that. But I'm going to match it up here because I would like it to match to what we have in the other practice problem. And that's going to be the general idea of it. We're just getting the general concept of these taxes and how the withholding kind of process works and what the journal entry will be looking like with relation to it. So there it is on a check-by-check basis. Now I'm going to sum this up. Sum it up this way. I'm going to copy that across. We're just going to sum it up. Sum it up. Little dot. Okay, so then we're going to go to the right. You could sum it up this way too, or do this calculation again to double check, given 2 checks on it. It's always good to have 2 checks or better than 1. So there it is. So now we've double checked it. So you can see how this would work both on an employee by employee basis as well as a total basis, noting that this employee by employee data would have to be given to the employees both on a year-to-date basis and on a paycheck by paycheck basis. So you can imagine this. What's this going to do for the accounts that will be impacted? Adam earned $4,583. We held from them, did not give them a portion of their earnings because we're going to pay on their behalf their taxes of $720 for FIT, their federal income tax that they're going to then see on their W-2, and that's going to be on their tax return. The $248 for the Social Security, which I did the dyslexic number switch on it, and then the $66 for the Medicare. So the net income would be the $3,548. The $3,548. For Erica, we got the $2,400. Her FIT, we're going to say, is $360 that we withheld. We also withheld her taxes of $149 and the Medicare of the $35. You can imagine putting that into our system as 2 separate transactions, the expenses being this amount, the payable that we owe to the government, not because there are our taxes incurred, they're the taxes incurred by the employees that we took from them and are going to pay on their behalf because we're forced to by the government, and then we would have the decrease to the checking account by the net check. Now, if this was something that was done by a third party, like a Paychex, then you can also just say, I just want to look at the gross. I just want to look at the whole thing total and just think of it as one employee that I'm going to put into my system to get the financial statements correct. So in that case, I could put a journal entry in place and say, I'm just going to increase the expense for the payroll expense by the gross amount, the total amount of the $6,983 for both employees, and then have the payroll liability of the FIT, Social Security, and Medicare for both employees go up with 1 transaction instead of 2, and then the net income decreasing the checking account, the amount that we are actually paying out. Now, if you were to do it that way, you have to still be careful because that means that you're going to post something to the checking account in a lump sum number instead of as it's going to appear when it clears the checking account, which is these 2 numbers right here. So even if you did the journal entry, you want to be careful with that last component when you do the bank reconciliation process. Okay, so then we got the employer taxes. On the employer side, we're going to match, in essence, the Social Security and the Medicare for both Adam and Erica. We'd also have the federal unemployment tax, but we're not going to deal with that because it's fairly small, and it does have a little bit of a twist to it in that you've got that cap. You've got a cap on it that I don't want to deal with. It's a low cap that can confuse things that I don't want to get into at this point in time. Just getting a general idea here. So if we take the totals then of this is what we have to pay over and above. So we'll total that up, and then we can sum it up this way too if we so choose. And I do choose to do that for a double check. So this is what we're going to pay on our taxes. So these are our employer taxes that we have to pay over and above the payroll that we're paying to the employees. These taxes that are right here, these are not employer taxes. Those are not going to be payroll tax expenses because they're not our taxes, even though we're the collection person for those taxes. Those are the employees' taxes that we're required to take from them and pay on their behalf to the government. These are taxes that we have to pay over and above the amount of their earnings that we're basically paying on their income. So then we've got the payroll liability. The payroll liability is going to be increased by the FIT, and then the Social Security on the employer side and the employee side, and the Medicare on the employee side and the employer side. Totaling that up, that's going to be the liability. So once again, what's going to be the journal entry, which we will do next time? We're going to say one journal entry, or we could do it in two journal entries like we saw before for each of these paychecks, or we can think of them as one lump sum paycheck would be increasing in either two journal entries or one the expense of payroll expense of the 6983, and then these three of the 1578 would be increasing payroll liability, and then we've got the checking account, which would be going down by the 5405 by these two amounts, but we could report it with one transaction. Then we would also have then the payroll tax expense of these two amounts, the 498, that would be increasing. The other side going to the payroll liability because we have not yet paid these. All we've paid so far is the net check. And so the total liability after those two transactions would be the sum of these items, or the 2,076. So that's what we'll then do. We'll use these numbers to create the journal entries next time.